Hello and welcome to another ACY Securities market review. My name is Alistair Schultz and I'll be your host through today's trading journey. Now on today's topics I'm going to be covering, we're going to be looking at the Australian dollar, gold and the dollar CAD, and I'm going to have a look at some sort of extenuating circumstances around coronavirus and the impacts that we're seeing in price. After that, we'll be moving towards the news for the week and I'll discuss a little bit on some of those things that you might want to keep an eye out for throughout the week in your trading. So first of all, we're going to have a look at the Australian dollar. At the moment, I've got a 4-hour chart up here, and you would have likely have seen this if you've watched some of my other videos. I have the exact same price points that I've had in there. There is another support line further down that I marked out from looking at a monthly chart a couple of days ago. But what I'm trying to show you today is that we're seeing that prices move down. Now, this is the lowest level in price we've seen since 2007. Price is cracking the 65 cent barrier. At the moment, it's hovering in the 66 cent range, but it's right on the border of it. Now, we know that we've been in a long-term downtrend beyond what the scope of this chart shows, but with the impacts of coronavirus, I'm just going to go through a couple of reasons why. Now, when you look at Australia's top trading partners, we have China, Japan, and South Korea. All three are seeing implications of what's going on with the coronavirus. Naturally, China is the main offsetter here, but South Korea has reported over the weekend that they've had some large changes as well. So with that in mind and our percentage of trading partner and what we actually send out in exports and imports for them, it's no wonder why we're seeing the Australian dollar slide down. Now, when we look at coronavirus a little bit closer, we can see how far the containment actually is. And they've renamed it from the previous one to now SARS-CoV-2. So it has changed in name, but the impact is still the same. In looking at that, we now have markings on Italy occurring, Iran is reporting some deaths and a number of new cases, and of course we're seeing it travel throughout the globe, which is obviously impacting some of the supply chains that are occurring. Now, when we go a little bit more about the current situation, South Korea has had a 20 times increase in the amount of infections that they've had just in the last 5 days. They're now sitting at about 600 confirmed cases, and it has been contained to one specific area, but Korea has turned around and said that they're going to be running it with a higher alert status than what they had previously. The IMF has said that economic recovery is at risk due to the outbreak. We've got Italy cancelling Fashion Week to reduce the potential spread of the disease, and we've also got China signalling out to us today from one of their consumer confidence reports that small to medium companies, which make up approximately 80% of Chinese business, will run out of money, with a third of them running out probably towards the end of the month and the other third running out towards the end of the next month. So we've got 2/3 of business out of China in small and medium enterprises running out of their cash flow and being able to actually support those businesses whilst they're getting shut down from various different means. Now, on top of that, we're seeing rising defaults occur within China, and that's going to be problematic looking towards the future. So when it comes to the next lot of data releases that we get, there's going to be a high interest in what is actually going on and where these rising defaults are coming from, and of course, looking at the supply chain mechanism that is affecting everywhere else in the world. From here, I just want to move into gold. Now, gold we've seen rising in price recently. I did speak about earlier those safe haven currencies and people moving their money away from the usual traditional ones like the yen towards stuff like gold. And that is becoming more and more evident the more we see price go up. The devaluation of the yen is an indicator of this. Naturally, we're seeing the US increase in value as well, but we're seeing gold rise at astronomical levels that you don't often see. Now, this is a monthly chart on gold. And the last time that we were seeing sort of price levels where they're at now was way back here in sort of 2010, 2012 area. Now, keep an eye on what's going on there. Now, I have marked up this chart with my own support lines and resistance lines, and then I've overlaid a Fibonacci retracement over the top, and they are surprisingly similar. So keep an eye for some of these price barriers. At the moment, you can see we've got a support line that might prevent the price from coming down, but the impact of coronavirus will affect this. If we start seeing changes in that supply chain and things sort of resume back to normal, I would expect to see gold prices start to come down then. But in the meantime, I'm expecting to see a lot of people who are moving their money from the traditional safe havens to gold to make sure that they're going to protect their interests and obviously their investments. The next chart we're going to have a look at today is the dollar CAD. Now, apart from the coronavirus news, I just wanted to give you guys a bit of information on what the leading impact of news was last week. So we had RBA minutes from the Reserve Bank of Australia. We had President Trump giving out a couple of tweets along throughout the week, and his impact about trade was usually the stuff that was moving price. We had CPI for the Canadian dollar. Naturally, that's going to affect the dollar CAD chart, but it has also affected a little bit on the US side as well. We have US stocks sliding a fair bit. We've spoken a bit about that in the past, especially when it comes to the Apple stocks and some of the FANG members. We've also then looked at market economics. So Market are a company that release data on certain events that are economically speaking, and quite often they're talking about, in this instance, the output of contracts and the decline that are coming for it. So you can see that's had quite an impact. It was Canadian news that did come out, but they were the bigger movers of the week. Now we're going to move on to the news and have a little bit of look there at what the news is for the rest of the week coming. So for the news ahead, we have a few different things going on throughout the week. Most of it is low impact news. There are a few high impact events throughout the week, but I've looked at the stuff that I think is going to have the most impact on your trading. So today we have a bank holiday for Emperor's Day in Japan. So expect to be seeing differences in volatility levels and the amount of price action that's actually going on, especially around that Asian session. It'll likely pick up during the European session. We have German IFO surveys coming out and investor confidence. We have UN conference discussions occurring as well today and for most of the week as well. On Tuesday, we have a variety of low impact events. None of them are really high impact, but the one to keep an eye on would be the CB consumer confidence from China, which could be interesting. It might be the first signaling that we see of what the impact of coronavirus in data metrics anyway. On Wednesday, we again have a number of low impact events. The US consumer confidence from the conference board comes out as well. And we also have the Bank of England doing their 2020 benchmark banking strategies. So I'm not sure if we'll see some information coming out of that, but it is something to keep an eye on just in case they do. It is ranked as a low impact event, but quite often when you see banking institutions looking at their benchmarking strategies, it is an interesting piece of news to keep an eye on anyway. Thursday, we have a variety of low impact events occurring. New Zealand consumer confidence coming out of ANZ, and we also have private capital expenditure figures occurring for the Australian dollar. On Friday, another series of low impact events. Japan unemployment rates might be something to keep an eye out. Usually they are low impact events in general from Japan because there's not too much change. They have a fairly stable economy from that sort of perspective, but coronavirus impacts, it may end up being something that's worthwhile having a look at. On Saturday, we have Canadian GDP figures coming out. I'm not seeing that will be huge, but it is something to watch for. And the big one that I'm actually seeing that I'm really interested in looking at for the rest of the week is China Manufacturing Pmi. Now that is coming out early hours Saturday morning, AEST time. However, because of the coronavirus impacts and manufacturing specifically and how much we're seeing change on that, and we've already discussed the idea of what is actually going on in China, especially with those small and medium enterprise businesses, I'm super interested to see what's actually happening with the PMI that comes out then. So that might be the one to watch for this week. But regardless, if you have any questions on some of the content that I've covered today, or you want to talk to me about anything that we've covered in the past, feel free to send me a message at talktoal@acy.com. And of course, like and subscribe to the video so you can get more great updates from us and reviews as well. Anyway, signing off for today. Have a good trading day ahead, and hopefully you have a good week as well.